the advantage. So with that itself, I think we got about 45 or something on LinkedIn. Usually LinkedIn, you don't get much. So even that was good, actually. Yeah.
I don't know what is the expectation of the people that they are thinking that I will tell them that the left hand column, right hand column.
No. Sir, irrespective of what you explain, I think when it comes to Q&A, right, that is where the value add on is. So yeah.
That is always there. Let's see. But what are the expectations anyway that you will be setting that question, so we can gauge what the audience are up to.
Yeah. Sir, so then I'll just go live.
Yeah.
You can mute yourself. Okay.
Yes.
Yeah. Very good afternoon, everyone. I hope my voice is audible. Okay, you can give me a quick yes or no on chat. Thank you. Great. Okay. So wonderful. So we will actually be starting shortly. We are just waiting for more audience to join us. So until then, if you have any questions, I would like to know what is the expectation from today's session. We have our speaker also with me here today. So I will be handing it over to him later during the session. Okay, Mr. Arjun, we are here. So it's just that we were on mute, and we are just waiting for more audience to join us. I hope you can hear me, sir. Okay, great. I see Mr. Umesh, Mr. Ashwath, Mr. Sawan, Tarsim, Mr. Ramakrishna, Mr. Arjun. Great. All right. So, audience, as I was mentioning, I just want to know what is it that you're expecting from today's session. Yes, as the name suggests, we will be covering parts on reconciliation today, right? And just to highlight something here, today's session's highlight would be obviously the question and answer session. So any kind of questions regarding reconciliation or let alone reconciliation, anything related to GST, because with me is a tax veteran with almost 28 to 30 years of experience who will be able to attend to any of your queries. And I'm sure we have audience who have attended our webinars with Mr. Akela being the speaker many times, right? Can I see if can I know if there are any repeat audience here today? Quick yes or no would be great on chat. Okay, Mr. Prashant says no. Okay, we have Mr. Chetan, Mr. Umesh. Yes, Mr. Umesh, I am aware. Okay, then we have Mr. Venkatesh. All right. Okay, nice. Okay, Mr. Akela, looks like there are a lot of fresh attendees with us today, sir. Looks like it. Okay, great. So audience, we will start off in about 2 minutes. Okay, for the rest of them who joined us a little late, I'm still here. So audience, we will get started. Once again, thank you all for your patience and the time taken to attend this afternoon. So I'm sure you are aware of the topic today, the crux of the topic being reconciliation. Right, so let us get started. Before we get started, I am Siddharth and I will be the webinar moderator for the day. And I handle product marketing for the company that I represent, that is Web Solutions. Moving forward. So I will take you through a quick, rather short introduction about the company from where we come from. So Web Solutions, we in fact are an independent company, as the name suggests today. We were in fact part of Wipro e-Peripherals. So in 1988, we were part of Wipro itself, and we were the peripherals manufacturing division. Most commonly, we were very well known for the dot matrix printers manufacturing. We were in fact a printer giant with the DMPs, and over the years the company evolved. They became a separate entity in 2000. That is, we've come out of Wipro, and from there on we have evolved over the years, and today we have not just the printing solutions on offer, but we also have presence on the digital transformation end. So we have solutions, as you can see on the right side, the timeline. We have solutions on GST. We also have a taxation, that is the e-invoicing, e-way bill, your integration, all that is taken care with one solution, a one-stop solution for your GST, which we will talk about today. And we also have a document management solution along with workflow automation. Moving forward, a few quick points on this on the company itself. As you can see, we have close to 23 years of industry experience once the company has become a separate entity, that is. And we have about 530 enterprise customers. Please note that we also have retail customers and we have close to 3 lakh customers on that end. And we are present in over 2000 plus locations. Our company, in fact, won the Company of the Year award last year for our DMS solution, the workflow automation solution. Now, quick briefing on all the solutions that we have for you guys. We have managed print services. As the name suggests, we also have digital transformation solutions. Under this, we have 2 different solution offerings, which I'll cover as well. And we also are the authorized distributor for Ricoh Japan to sell Ricoh products in the country. And lastly, as I mentioned, we have presence on the retail end as well. Moving forward. Audience, once again, I hope my voice is loud and clear and I hope you're able to see my screen. Quick yes or no so that I can proceed. Thank you. Okay. All right. Great. Thank you. So a quick introduction about each of the solutions that we have on offer. We have managed print services. Basically, what the term suggests is our company offers something called asset management. What that means is assume that you have about 30, 40, or maybe n number of printer requirement. We will be able to handle all that. We will also handle your existing printer infrastructure and we will handle your entire printer network, be it different locations. Aside this, our printers offer different highlights such as your secure printing. There are various things on offer that we have on the printer end. And lastly, we also offer the complete service and support. As I mentioned, we are present in over 2000 plus locations in India. And we are also known as India's #1 MPS company. Now, on the second part, as I mentioned, we have a tie-up with Ricoh Japan. Ricoh, if you guys are not aware, Ricoh is actually a printer giant in Asia, and they are based out of Japan, and they have a whole lot of printers on offer. Now, we have about 15 to 20 printers on the Ricoh portfolio, and we actually cross-sell that on the side as well. And we also handle complete service and support on that end, including the peripherals, that is toners, cartridges, etc. And moving to the digital side, we have a GST solution. We in fact hold a license called GSP, as you are all aware of. We are authorized by the government, and we have a solution that works on an ASP GSP platform. What it does is we have the solution that will help you with filing, reconciliation, your data preparation. We have close to 25 to 50 different templates built to the solution, which are also customizable. And we have close to 80 plus methodologies built to the platform for validation. We have different modules for e-way bill generation, e-way bill cancellation, all that can be taken care of, including your truck number updation, all that can be done. And we have e-invoicing, obviously, where you can generate IR and you can upload bulk invoices. There is no limit on that. And on the ERP integration end, we support most ERPs such as SAP, Oracle, Microsoft Dynamics, NetSuite, and other API related integrations. For those of them who are technically sound here, our API construction is on RESTful APIs. And we also have another solution which is called Managed GST Filing, guys. To give you an idea of what Managed GST Filing is, we have a dedicated team within our company which will take care of your filing and reconciliation challenges. So it is basically, in simple terms, you outsource your tax related, finance related issues to us. That's how it works. So moving forward, and we also have a document management solution, as I mentioned. Now, on the document management end, as the name suggests, it might just work like your Google Drive or OneDrive, Microsoft OneDrive. But the highlight here is we have a workflow automation engine built to the platform, which will help you with any kind of process automation for your HR team, your finance, your legal team, any sort of approvals, procurement, anything there is, our solution will be able to take care of that. So that's on the digital transformation end. And lastly, we have presence on the retail end as well. Now, retail end, basically, we have your billing printers, I'm sure you would have seen touchscreen devices in supermarkets, right? So that is the offering that we have for our retail customers. So that brings me to the end of the company introduction. Once again, thank you all for your patience and time. We will be moving forward to the presentation itself that you've been waiting for. This is a quick view of some of our clients. And a quick poll for all of you here, since we will not have time to show you a demo. In fact, I might have, based on the time I will decide. Let me launch a quick poll for all of you. So I'd like to know if you are currently exploring any GST or managed GST solutions for your company or your organization. I will leave this poll on for the next 1 minute. I'd like to also mention that those of you who are interested, you can obviously click on one of the two options there. I will be able to arrange a free demo of our solution, a call based on your availability by Monday or Tuesday. Yeah. I also like to mention that we have about 120 to 130 customers on the GST and managed GST solutions end. We have a dedicated GST support team, which will be taking care of any of your filing, reconciliation, e-way invoicing challenges on a working day basis. Okay, great. So let me end the poll now. Thank you so much for your interest here. Let me end the poll and let's move forward. Okay, so without any further ado, I'd like to introduce our speaker for the day, Mr. Akela A.S. Prakasa Rao. Let me give you a brief introduction about Mr. Akela is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani, that is Birla Institute of Technology and Science, in Electrical and Electronics Engineering. He is also a gold medal holder who completed LLB from Andhra University in the year 2001. Mr. Akela is a certified fraud examiner as well, but currently not active in that field. His previous stints, he has worked in the Central Board of Indirect Taxes and Customs, that is CBIC from 1994 to 2008. Worked for BSR and Co., also commonly known as KPMG today, Bangalore from 2008 to 13. His major stints were with Toyota Kirloskar Motor, Bidadi from February 2013 to November 2016. And lastly, Biocon from the years November 2016 to June 2021. Mr. Akela is a member of indirect tax committees of various trade bodies, to name a few like BCCI, CII, FICCI, and so on. He's also a very avid article writer in various platforms, forums such as TIOL, Tax Sutra, on various tax issues. Aside being a very regular speaker for us, he's also a speaker and panelist on various other forums on indirect tax matters. He comes with more than 28 plus years of experience in the field of indirect taxes, with exposure in government, consultancy, and industries, to name a few like auto and pharma from his previous experiences. He has had hands-on experience in GST, customs, FTP, SEC, central and state excise, so on. To give you a current update, he is currently practicing as an indirect tax advocate, assisting a number of clients on all aspects of indirect taxes at all levels. So if there is anyone who would like to clarify any sort of indirect tax issues, or if you're looking for an outsourced solution, I think he's the man to reach out to. It is an absolute pleasure to have you here with us today, sir. I'm sure the audience is looking forward to directly hearing from you. Over to you, sir. Thank you.
Thanks, Siddharth, for those kind words. And I warmly welcome all the participants today for taking time off on the weekend to attend this session. And I just wanted to know, like, what are your expectations from today's session? But I could not see much in the chat box around it. But if there are any questions that you can pose in the Q&A box here, so I will be definitely attending to all of them. So you will not be disappointed that all the questions are going to be answered.
Absolutely.
And then regarding this presentation, I will tell you that I have structured this as this, that the reconciliation basics and what is the need for the same, and what are the areas that we need to prioritize, and where is the need for the technology, and what is there in store for us, then why we should gear up ourselves. These are the focus areas for today's session. There can be some thought processes which may be repeating, but it is only because the context requires, and to emphasize that it's important for you. That is the reason. So kindly bear with me that there is a comment that the presentations are too fast that he reads from the screen. Yes, I do it. That is just to enable enough time for us to have a discussion on your questions. So that is the reason I'll be reading it, because this entire presentation will be available to you. So that if somebody is interested, then they can go through the lines. That's not a problem. But I'm not going to bring in anything that is new to you, but only just to repeat and to reiterate what is important for you, because you are all professionals. You are all working on the GST for the last 6 years. So we are shortly going to celebrate the 6 years completion of introduction of the GST, and where exactly that we stand, that everybody knows it. And recently that we have concluded this 50th GST Council meeting also, wherein that they have announced a slew of measures and a series of circulars which have come and clarified many outstanding issues, but certainly opened new doors for litigation. So that may be at some other point of time that we can discuss, but today's agenda is as such. So let us continue with that. Next slide, please. So the reconciliation, what does it mean? In accounting, the reconciliation is the process of ensuring that two sets of records, usually the balances of two accounts, are in agreement. Reconciliation is overcoming the differences, ironing out your differences. So it is general practice for business to create their balance sheet at the end of the financial year, as it denotes the state of finances for the period. And reconciliation is used to ensure that money leaving an account matches the actual money spent. This is done by making sure the balances match at the end of a particular accounting period. So the definition given by Oxford Dictionary of Accounting is a procedure for confirming that the balance in a checkbook matches the corresponding bank statement. And this is normally done by preparing a bank reconciliation statement. And a procedure for confirming the reliability of a company's accounting records by regularly comparing the balances of transactions. An account reconciliation may be prepared on a daily, monthly, or annual basis, as you decide. Next slide, please. So there are several reasons why the reconciliation for the GST returns data is required by the businesses under the GST. So the taxpayers will be able to claim the ITC only if the invoice is present as part of their GSTR 2B. We are all aware, because that you must be facing so many questions from the department day in and day out. So due to this, the taxpayers will now need to do a reconciliation whenever the ITC as per their purchase register, the GSTR 2B data is not matching. But up to July 2020, the taxpayers were comparing the 2A purchase register. But due to the introduction of this static return in the form of 2B, the monthly reconciliation has moved from 2A to 2B. However, the yearly reconciliation 2A, which is a dynamic return, is preferred. But as an exception, one must still refer to 2A for TDS and TCS credits. GST returns are filed on a monthly or a quarterly basis, depending on what kind of an SSE you are. And then finally, after the financial year gets over, the annual returns must be filed on or before the 31st of December of the subsequent financial year. This would need consolidation of the data reported over the financial year. And in order to ensure the correctness of the declaration made and to avoid duplications, taxpayers must reconcile the data and then consolidate the values and make the declaration. So next slide, please. Yeah, so there are certain deadlines which are stipulated under the GST law for making amendments to the GST returns data or to claim the ITC. So as per the CGST Act, following actions must be taken at the earliest to the filing of the return under section 39 for the month of September, following the end of the financial year to which a particular invoice pertains, or furnishing of the relevant annual return, whichever is earlier. Now the date has been enhanced to 30th of November, that you are aware of. And the claim eligible the ITC against any invoice raised in the financial year. So beyond this date, that you will not be able to. So these are some red lines which we need to understand very clearly. And any apportionment of the ITC belonging to a financial year as eligible and ineligible not made earlier must be effected before this deadline. And a declaration of the credit debit notes issued against any invoice raised in the financial year, and file the amendments to information reported in the GST returns filed in a financial year. The due dates are subject to change as per the notifications being issued from time to time by the CBIC. That you might have seen recently, the last week, that the Manipur returns were extended because of the prevailing situation. So considering those things that the department is giving the adjustments in the dates, but you have to file the returns. Otherwise, you know the consequences better. With effect from 1st of January 21, if the tax officer may outrightly suspend the GST registration of taxpayers and send show cause notice to cancel the registration in form REG 31 if he finds any discrepancies, and comparing the details of the outward supplies furnished in the GSTR 1 versus GSTR 3B, where you are going to pay your taxes, and on comparing the details of inward supplies reflecting the GSTR 2B when compared to GSTR 3B. So what is the exact credit that you have claimed against the credit you have put to use? So these are the very, very important things that one needs to take care of. Next slide, please. So what are the areas that you need to prioritize? So GST reconciliation involves matching of sales and purchase data between different returns as well as sales and purchase registers. So under the taxation, reconciliation holds importance because it can give rise to tax short paid or not paid or excess paid as well. So following mismatches of differences can be noticed by taking up the matching and reconciliation exercise. What are that you can find out? The difference between the amount of input tax credit shown in 3B and 2A versus 2B, discrepancies in the sales details between 3B and 1, and until 31st of December 21, differences in the provisional credit as claimed under CGST rule 36(4) and the actual credit that is claimable under 2B, because there was some percentage of 20%, 10%, 5% excess that you can claim it, and the differences between the ITC values available in the 2B versus ITC available in the books of accounts for rigorous vendor follow-ups, especially from 1st of January 2022 after removing the provisional ITC by virtue of section 16 to AA, and differences in sales details between the books of accounts and the GSTR1 as populated from the e-invoicing system, and difference in the tax payable upon comparing the auto-populated GSTR3B with books of accounts. Next slide, please. So any differences noticed between these returns will lead to scrutiny notices being issued to the taxpayers or worse, suspension of the GST registration. And there can be several causes for the mismatches. Some of them are the vendor has declared the liability, but credit is not available in the GST return. Such credit should be availed at the earlier of the due date for September returns or the annual returns. And the vendor has not declared the liability and supplies made, but business has availed the credit on such procurement in the GST return. Then business should follow with the vendor to ensure that a liability is declared, he files his return and pays the taxes. Else, the risk of such credits being disallowed may arise in your hands. Similarly, the mismatch between liability declared by the vendor and the credit avoid. The reasons for differences should be identified, reconciled appropriately by issuing debit or credit note at the earlier of the filing of the return under 39 for the month of September following the end of the financial year to which a particular invoice pertains, or furnishing of the relevant annual return. Mistakes in the details furnished. There can be mismatches in the fields such as GSTN of the supplier or recipient, number and date of invoice or debit note. Make amendments in the GST returns of the month following the relevant month when mistakes are committed. See, there are many important fields which are identified when you want, if you are already eligible for a e-invoicing, all those fields, the matching has to happen. If there is any kind of a mismatch, then you will be in trouble. So when you are submitting your invoice for electronic invoice IRN generation, then if you have taken care, then normally you can avoid all kinds of problems, at least from your end. Next slide, please.
Yeah, sir, Mr. Akhil, if you don't mind, can I launch a poll?
Yeah,
I
please.
I'll just check how attentive the audience is. So
Sure,
we'll
sure.
yeah?
Because that initially it happens that I'll be reading out.
Correct. Yeah. Okay. So audience, I'm going to launch a quick poll. I'd like to see what kind of engagement we have here today with us, because I think both Akela sir and me can vouch that in general we have a high engagement rate over here. So let's see how many of you are actually going to attend. So we have about 58 people with us today. Let's see what is it that you think. Do you agree that electronic invoicing will help in better revenue collections by plugging leakages? I will leave this poll on for the next another 1 minute. And once you're done, we will also share the results. And I'd like to mention that we will be having a few more polls. I will also be redirecting you outside this webinar for a quick poll as well. So stay tuned on that part. And as I mentioned, if there's any queries, please put it on the chat, guys. I see a few of them had raised their hands. If you can let me know if there's any specific query or doubt, I think I can take that up on chat. And okay, Mr. Manoj, thanks. Yeah. All right, not bad. We have 41 people. Akela sir, what do you think? I think this is pretty good
It's a
engagement.
unanimous view that yes, electronic invoice is the remedy for the problem that we have on hand, which is really heartening for the government also, because this is what that the government is expected. And if everybody is in agreement with it, I think in a very short time that we are going to move to 100% electronic invoicing across all sections of the SSCs.
Totally.
Because currently it is a 5 crores and above, that such kind of restrictions will be removed, because if everyone agrees that electronic invoice is the solution for the plugging the leakages, then certainly government will be very happy to know this kind of poll result impact.
I agree. Okay,
Yeah.
so thank you
So
all
to
audience.
continue with the presentation, to start with, the reconciliation must be done for every GST. Then it should be considered at a PAN level also. And the reconciliation must be done across months for the entire financial year, and not just, but the amendments made to the GST returns of the previous financial year in the current financial year must also be considered. And ITC is the most important component of a GST return, as it holds greater relevance when compared to any other component of the GST returns. So the stage at which the sanctity of claims were checked in the previous tax regime is no longer the same as in the current GST regime. So the genuineness can be confirmed by a taxpayer now at the stage of filing the GST returns using this GSTR 2B, 2A and taking action. So earlier, the tax authorities used to carry out this check while processing the returns during their assessment. So that is the important difference that one needs to observe. And hence, the vendor-wise reconciliation must be done on a regular basis. And if not done, taxpayers must consider doing it before filing the GST returns of September of the financial year following the relevant financial year. This will help in identifying and declaring any unclaimed ITC within the deadline. And the claim of ITC belonging to the relevant financial year, if not claimed earlier, are reversed in the ineligible ITC if not identified and done earlier. Match the table of exports at 6A of the GSTR1 with the corresponding declaration in the 3B. Matching of table of exports in 6A of GSTR1 with the details of shipping bills submitted on the ICE gate. Comparison between the annual income tax return with the annual GST return. Declaration of turnover from business at a PAN level, comparing the purchase register with the GSTR 2A for the entire financial year, comparing the one with the 3B on a monthly basis and at an annual level also. Next slide, please. So the tax complaint in accordance with the GST and its claiming of ITC at fault anywhere, and hence the possibility of getting notices later, missing out on a possible working capital by claiming less than what I should be claiming, and who are the suppliers from whom I am getting the most amount of pain, reconciling, and how to make it easier for them and for myself. These are the things that you need to keep it in mind while doing the reconciliation. So what are the major issues with the reconciliation of the GST and the GST returns? What you normally find is invoice number of the purchaser as recorded does not match with the seller's invoice received in 2B. Both follow a different convention. This is a very common thing. Somebody puts that forward slash, then followed by the financial year, but while uploading it in the system, that he may forget to upload it because it is very common for all the invoices generated by him during the financial year. But when you are putting the entire sequence, then it will not match. So what is to be done? So if you do a manual reconciliation, this is where that you will be spending most of your time, and all these issues are of repetitive nature, where that you certainly have to think of automation. And the purchaser may work in multiple states, and seller has raised an invoice with another GSTN belonging to you instead of the actual purchaser's GSTN. In this case, it might not reflect completely in the GSTN level. So very common mistake that you have multiple GSTN numbers and your vendor has invoiced you to one entity, whereas the goods are delivered, the supplies are made to another GSTN. Similarly, the invoice date by the purchaser doesn't match with the seller because the recording pattern is different. somebody will follow DD, MM, YY, YY. Some follow DD, MM, YY. So some follow particularly MNCs, MM, DD, YY. So these also will give you trouble. And the purchaser and supplier have recorded invoices in different return periods. So the seller might have recorded it because that he made a sale at the second of the month. So in the month of July, whereas that since the purchaser has received it in the month of August, he must be recording it in the month of August. Then what happens? It becomes a reconciliation item for you. So invoice value in the supplier and the purchaser differs by minor value because both parties have different conventions of rounding off. It's a very rare error, but it can happen. And sometimes what happens that some of the transactions that you agree the price at a other than INR, but the payments are always made as per the INRs also. So if that is the case, the conversion rate also creates a problem for you. So next slide, please.
So I will just take a quick minute, sir. I'm going to redirect all of them to a LinkedIn poll quickly.
Sure.
So audience, I hope you're able to see this link on the chat. I'm just going to quickly paste that. Give me 1 minute. Okay, done. So I hope you see the link on the chat. So what I'd request is I request all of you to quickly click on that link. And those of you are obviously like using LinkedIn will be able to access this. Request all to quickly input the live poll that is on the screen right now on our LinkedIn page, and you can come back to this Zoom window. Thank you. So let me just quickly read out the question that is there on LinkedIn anyway, for those who are not there. Which are the areas in GST reconciliation that is most time consuming? So obviously there are a whole lot of areas to cover, but I have taken only a few here because LinkedIn gives me only 4 options. There's input tax credit, data consolidation, then you have inter and intrastate transactions, and lastly reverse charge mechanism. So I am sure all of you will have different views. So I'll give you all a minute to quickly attend and come back on this. Okay, great. I see the votes are increasing on that end as well.
Very interesting poll, I say.
Sorry, sir.
It's a very interesting poll that where the options are really tricky.
I know. Okay, so if the options are tricky, I'd also recommend some of you to mention your comments on the comment tab itself on LinkedIn. Obviously, it is open for that. Okay, great. It's pretty good. I think let me wait for another 30 seconds and then we'll get back to the presentation itself. I have about 20 votes on at the end, which is pretty good. And audience, if there's any queries, please put it on the chat and QA tab. We will be taking it up very soon.
So which is the area that the audience have selected?
Okay, sir, I will tell you right now what I'm seeing live results is input tax credit. There is 67% on input tax credit. Then the second is actually data consolidation.
Oh.
And yeah, I know I haven't covered all the options here. There are a whole lot other options.
Yes.
But yeah, I think, sir, what do you think is the most
important things that you have covered it? And actually, even the people who are, because that they are hands-on with all these things and all, they have made the right choice. I say that ITC is the most trickiest part of it.
I agree, sir. Is there anything else that I may have missed, sir? I mean, you can correct me if I have.
No. These are the 4 major areas, in fact.
Okay. So I think you can carry on, sir. I'll go to the next slide.
Yeah. So the invoice value differs in suppliers in the purchaser's end in case the credit note or debit note are issued and it fails to match in a recon row. And when invoice number and date do not match, while only the invoice value matches, and there are multiple invoices between the purchaser and the supplier where every invoice is of the same value in different dates, and one of the parties has recorded the invoice higher than the other. This happens in the case of regular fixed supply businesses. And one of the major challenges in doing reconciliation is Both parties involved may have different nomenclature for storing the invoice numbers, while the implementation has a hard match around invoice number. So these are some of the areas which you need to see, because by default, the issues can be one of these things. Next slide, please. So there can be multiple reasons for the mismatches also. Quoting the incorrect GST number while filing the returns is one of the most common mistakes. Clerical errors in punching the invoice details, including the invoice number and invoice value, tax amount. And vendor fails to include certain invoices on which the registered person may have claimed the ITC. A mismatch between ITC availed by the registered person and the amount declared by the vendor due to incorrect liability declared by the supplier. The registered person omits to avail ITC even when the vendor has declared his liability correctly, and a registered person must carry out monthly reconciliation and consolidate them on an annual basis. Moreover, in cases of large-scale operations, vendor-wise reconciliation is a must, and it should be carried out more often than the monthly returns. And one must ensure that the changes carried out in the GST returns of the previous years are reflected in the current year while reconciling the data. And one must ensure ITC is claimed and utilized in full, and no part of it lapses are left unused. Next slide, please. One must reconcile details in the income tax return with the GST annual return, and they should ensure purchase register relating to the goods matches with the details in the GSTR 2A. And they also have to ensure that register relating to the procurement of input services matches with the details of GSTR 2A, and ITC claimed as per the books of accounts also matches with the 2B. And then they should ensure that sales register matches with 1, and the details in the 1 reconciled with the data in 3B. One must reverse the ITC that has lapsed, which could not be claimed within the due date. Otherwise, also it will lead to reconciliation issues for you. Next slide, please. Yeah. So, what is the reconciliation? What is the need for the technology? See, why I'm saying that the technology is required means that when the small mistakes happens, that our eye, while doing the reconciliation of a huge amount of data before us in the form of Excel or something, that I can miss some detail, but a program will not. So that is the reason this kind of routine tasks where that there is a possibility to miss is there, then certainly you have to take the help of technology. But what kind of a technology that you should choose and what the tool should be capable of is what one must know, because there are many tools which are available in the market. But what suits your requirement, that you need to see, keeping several other parameters also in mind, like the suitability with your IT team. Because whatever is the kind of IT software that you are having, ERP software, whether it is capable of running on your existing ERP, whether you want it on site or on cloud, all these other factors are there. But some of the GST related factors is what I am capturing over here, so that you can make an informed decision while embracing the technology. A technological solution which can solve all of the major pain points is the need of the. This will add a lot of value to the business owner, but certain features one must find in a powerful reconciliation tool or a system for matching and reconciliation of the GST returns are as under. The tool should be able to handle a massive amount of data. If you are a small time player, fine. But if the system is capable of, because everybody expects that I am going to grow in size in the coming years. So with that intention only, we will be undertaking the business. So the tool that we are buying should be capable of handling massive amount of data. Today I may be 50 invoices only, but certainly I'm aspiring to go to 500 and 5,000, 50,000 invoices in future. So your tool, you should not be changing. So it should be able to handle it, and it should make it easy for the business owner to get data into the system for reconciliation and also take it back to his ERP post the GST reconciliation. So a seamless integration here would help, and it should be able to get the data into the reconciliation system from any kind of an ERP, Excel, Billbooks, or SAPs and others. So it should be able to provide deep reporting and insight which can help answer the pain points during the audits. Overall, it should also make the whole process month over month seamless and largely efficient that the business owner doesn't feel a burden, and it should allow the easy data sharing and collaboration between the business owner and his accountants. Given the GST rules might keep changing over a time, the system should have the ability to evolve fast and in line with the changes by the government. That means that the backend, the system team has to update as per the new rules that are prescribed by the government. This will extract the real problem away from the business owner and make it still seamless for them. It must be extremely intelligent to handle any case of missing or wrong information, and it can be wrong dates, wrong invoice number, missing item, wrong tax rate, wrong sale value, or a lot more. It should be able to provide the most effective reconciliation in all such kind of scenarios. For silly mistakes also, it should not be saying that no, credit is not eligible for you. If it is a curable mistake and which can be tolerated, the system should be able to guide you that this is something which is curable, so please initiate an action. The system should be real-time, proactive, seamless integration to bring the invoice for reconciliation, and real-time automatic application of the predefined rules will help. And proactive reminders and automatics to reduce the human intervention will also make the system more efficient. So once you evaluate and finalize, please check whether all these criteria are met. Then you can go with that vendor. Next slide, please. So what is there in store for us? This is most important, because unless you have a clarity that what is there in store for you in the coming days, that you will not be able to understand that why at all that you should be going in for digital. See, Reserve Bank of India is extensively making use of the latest technologies, which we may not be knowing yet, but the kind of changes that they are proposing every day, that if you just follow, then you will understand how much of an amount of work that is going on behind the scenes when they are coming out with any kind of a new announcements. Now, even in the GST also, the revenue is taking a clue from the RBI, the way it is embracing the technologies. Even the CBIC and the GSTN are also taking forays into the technological developments. So they are taking the help of artificial intelligence, big data analytics, and machine learning. These are the three things which very widely being discussed in the markets, right? So in reconciliation of the data, these are going to be helpful, and the analytical reports are being made available to the field formations for their verification, and also helping them to raise the demands in all possible cases of aviation. So the GSTN has developed a lot of analytics using all these latest technologies, which are being made available to the field formations, and that's how that you are getting so many notices. Simply, if there is a small mistake in the reconciliation, immediately that notice will come from the department. You might not have observed, but the departmental analytics will give them that update. So there were times in the past when the industry used to have the upper hand in using the technology, but unfortunately now the revenue appears to have taken the lead. Hence, it is high time that industry should realize this fact and adopt the newer technologies and automate their systems in order to be compliant. And there is a likelihood that the entire invoice generation will be automated in the coming days by making it mandatory for electronic invoicing without any turnover limit. Fortunately, you are also aligned with this view, as can be seen from the poll results. And the ITC would be verified using blockchain technology. So nothing to worry that if you are not very tech savvy, that how exactly this is going to happen should not bother you, that it is going to be, you will be educated in due course of time. And already the assessment, audit, reconciliation are being done without need of any documents and completely online. So they're going to be set up with GST tribunals are likely to accept the filings online, and submission of documents will also be online. See, even your appeal proceedings, appeal filings, everything is going to be online. That is what is the expectation. And various systems like IceGate, GST, and DGFT, SCZ Online, with all these things that you are grappling day in and day out, they're all going to be integrated in a phased manner. Already many actions were taken, and then they are creating different kinds of archives like eSanchay and all this, wherein that you can park your documents and this what is that? We have got that Digi. one digital archive also the government has created, DigiLocker, wherein that you can store your documents and you can recall them as and when you want. So such a kind of a facility is what is being thought about. So the government is soon going to announce all these measures. And then DigiLocker geolocation for the registrations is already live. So government is sending very strong message that future will be the digital era and it will be a paperless processing in under the GST. So taking a cue from all these indicators, industry should embrace the technology at the earliest opportunity, else you are going to fall behind. And I don't want such a situation to happen. So I strongly recommend that you should think of going in for digitization of your system, because reconciliation is not a small matter. The way that I've presented over here, there are so many areas where a mistake can happen. So if you pick up just one invoice and start looking, by going through my presentation and ticking each and every point, saying that, oh, in this area, whether the mistake has happened or not. Next, no, this is not. Next, go to next. You cannot do that. If you are really in a big or large organization where the vast amount of data needs to be done, then considering the fixed timelines and all, it is going to be a Herculean task for you. So my friends, my humble request to you is you should impress on your management to go in for digital at the earliest. 6 years is too long a time that has been given to you. So, but you should also know that which are the vendors who are really in real time and are ready to provide you a solution. So with those that you should go, so you can evaluate and then you can take an informed decision. So I think that I have come to the end of my presentation. So if a time permits, that web team can decide whether they want to make any point from their end on the automation solution that they have at their end, or otherwise that I will be taking up the questions. But I could see only one question in the Q&A box. So if there are any other questions, I humbly request that you please type them in the Q&A box. So in the meanwhile, that the web team can take a call whether they are going to make any presentation or that I can continue with my questions.
Yeah.
Siddharth, over to you.
Yeah. Thank you, sir. Thank you so much for the presentation. So I think we'll get into the questions, sir, because I don't want to lose the audience on the demo end. So if time permits, I think if the question answers ends and if we still have audience who would like to see a demo, I will surely do it. So we will get into the questions first. I think we'll take that up. I know the questions will build on as we start approaching. So first question from Mr. Srinath on the Q&A tab. We
So
can
when
take
you
that
are
up, sir.
supplying goods to the SEZ units, whether we need to collect any documents to prove, you need not collect any document to prove, because once you have made a supply and in the supply invoice that it is clearly shown that the GST number belongs to an SEZ unit, then that itself is an evidence. But nevertheless, the once the SEZ has accepted the goods, then you if you are claiming any kind of a duty benefits because that you are making a supply, and certainly that it is a deemed export in your hand, hence if you are going in for any kind of benefits against the deemed exports done by you, then yes, a acknowledgement that the goods are duly received at their end is what is required. So it can be downloaded from the SEZ online system, or an endorsement on your invoice also will do. Either ways, the department may say that endorsement, but now those manual processing is gone. So even a download from the SEZ online that the goods were inwarded and the SOR EAO has accepted them on the online system. So that should be a good enough evidence for you that you have done the deemed exports. So that's the only thing that you need to be taken care of.
Okay. Audience, can we have more queries on the chat? I did see some of them would raise their hands also. I'd like to mention that if there's anyone who wants to directly interact with Akila sir also, I'll be able to do that, wherein you can unmute and talk.
There are two people who have raised their hands. Are there any questions from their end? Prabhakaran Muthu and Manu Jengit. Srinath has got another question. So if it is not comfortable for you to type them in the Q&A box, then maybe that you will be unmuted, that you can pose your query, not a problem.
Yeah. So I think what I can also do is meantime, right? Let me just quickly pull up the. Okay, we have just a minute, sir. I think there's some more who have.
Now the questions that you have got, that I could not see the audience over here.
Okay, they're not there.
If the persons are not available, then what is to be done? Can RCM input can be taken in the same month? I think Prashant, you are attending my session for the first ever time, that this has been answered several times in the past also. See that this debate is always going on. So are you in a need that you have to take and you have to make use of it in the same month? Then you go for it. The law is not barring you. But the only thing is that if you want to play it safe, then park it for that month and take it in the next month. Utilize it in the next month. That's my advice. Law says that you can take it, there is no bar, but it all depends that if you run into any kind of problems, then at that time explaining it will be difficult. That is the reason I'm just saying that why don't you make the payment in 1 month and take and utilize in the next month. If it is really tough situation to balance, then you can do it. Law is on your side. I'm not saying that law is against you. No. So Ramya has got a question. If GST is not reported by the supplier till 30th of November of the following year and no future invoices to adjust, how do we recover the loss of credit? Make a civil suit. That's the only way. Because that you are tolerating him till November and you are now looking at the government and say that give me a solution. You are supposed to be proactive. You have to chase him so that he will declare his liability and he files the returns and pays the taxes so that you will get the credit. If you are not able to succeed, then the only other option to settle it commercially, but GST is not going to help you. Sorrow, does this new circular on distinct person cross-charge cover a case where IT project being billed from one location may not be the HO and resources of other locations as well as mapped on the project? In such a case, the requirement of inter-unit cross-charge getting dispensed of in terms of this circular. Little complicated, but I could understand. But for the audience that I'm just repeating my understanding. Saurav, in case if I'm going wrong, you can correct me. What he says that he is having an IT project wherein that he is having a multiple units also. So from multiple units, he is pulling people from different locations and he is putting them in this particular project and he is billing for the project from one location. It may not be the head office. So in such a scenario, he says that the requirement of inter-unit cross-charge getting dispensed of in terms of this circular, that what is that one can do. But this is a wrong understanding of the circular clarification. See, when you are a DTA setup and you are doing it alone, then things are to be dealt in a particular manner. But if you have got an STPI and a DTA combination, and you are pulling people from these kind of things, then the solution is different. What the circular is clarifying is when you are cross-charging, what you need not break your heads is the salary cost of the employees, because after all, the employees belong to the organization and they are rendering services, whether they are doing it to your branch or the head office, ultimately that they are doing at the PAN level to the same company. That is the reason their salaries need not be apportioned between different units. That is what is the larger intention of the circular. But by taking that view, that you cannot say that when services are being rendered between an SEZ unit, DTA unit, combined when you are doing an export from one unit, then whether cross-charge needs to be done or not, the answer is clearly that you have to do it because they are distinct persons established under those different states as per the laws prevailing over there. And if there is a service which is being rendered, then it has to be evidenced in the form of a GST invoice. So while arriving at the value, then whether the salaries are to be factored or not is the limited point what the circular has clarified. But that does not mean then when only manpower supply is the only point, that the employee's salary cost is the only cost for these services, then in that case also it should not be charged. They never said that. I think, Saurav, that I have answered you. If there are any supplementaries, I'll be happy to take. If any ITC reversal belongs to purchase return, where I'm supposed to show in 3B. The purchase return, where I'm able to show it. See, purchase returns can happen in two different ways. When you have received the supply at your doorstep, and once your security people have seen the document and the goods, then if they have decided that no, these goods do not belong to me, or that we don't want it, then it has been returned to him. Then normally the goods will be returned on the invoice of the supplier only. You need not be doing, you will not be doing anything. But if you have accepted these goods inside your factory, you have accounted for them, then you realize, oh no, these goods I don't want it, I want to send it back. Then in such a scenario, you are going to raise a supply invoice and you are going to return it. So it is going to be your sale. So in such a scenario, that they will go through the GSTR 1 only. So I am not able to understand that in what situation that you have this question, that it is a purchase return and where you have to show it in the 3B. Because if it is taken by him in the first scenario, wherein I said that without taking entry inside the factory itself, the goods are rejected, then your 3B is not impacted. Because he is going to take back and he is going to raise a credit note and nullify the whole transaction. So you are not impacted. But in the second scenario, when you have accepted the goods and then rejected, then you will be doing a sale. Then it will be in your GSTR1 as a sales, and then it will be reflected because you have to pay the liability in the 3B. I think it is clear. The next question, can we use AI for 2B reconciliation? How? See, how you have to is something which you need to sit with your IT team and discuss. Here we are not telling you how IT can be, AI can be put to use in the reconciliation. Certainly, if you are having a programming capability or your IT systems are providing it, you can go for it. I'm not the best person to answer it. Do we need to pay interest on RCM liability if we have past dated RCM invoice? Sir, this question cannot be answered directly. I'll tell you the scenarios. See, you have received an RCM invoice. If you have already accepted in your books and made the payment, but forgot to make the reverse charge payment of GST, then in such a case, yes, you are liable to pay the RCM along with interest. But you have taken this invoice, but never recorded in the books, did not make the consideration also. In such a scenario, as soon as you take cognizance of it and make the payment towards the consideration, that is the time when RCM liability has to be discharged. Because for discharging your RCM liability, what is supposed to be done by you is that you have to raise a self-invoice. So the self-invoice will be the trigger for you to pay the RCM liability. So if it is not hitting your books, the RCM invoice originally received by you, then there is no requirement for you to pay interest. But you have already recognized it in the books by way of making payment to the service provider, but did not raise the self-invoice or pay the GST under RCM, then you are liable to pay the interest. So you have to differentiate, and then accordingly you have to take action. While claiming ITC of the previous month in the current month while filing 3B, system shows red mark. What is the correct way of claiming such ITC? System is not prohibiting you to take that. If it is showing a red mark, means it does not belong to that particular month only. So I don't think that there is anything wrong in your hands, because in the last month's 2A 2B reconciliation, you might not have seen this invoice. Hence that you have part date, or that you have a habit of after making payment only availing the credit. In all such cases, this red mark automatically comes in, but the red mark does not mean that there is a bar. It is only cautioning you that it doesn't pertain to this month. The web team, technical team can correct me if I'm wrong. Can we claim GST ITC on banquet charges? including food and beverage. Sir, why you have conducted this ceremony of serving food and beverages? If it is in or in relation to your business operations, then certainly you are entitled to. Otherwise, not. It is simply because that business has suffered some expenses. Whether I am entitled for a credit is not the question that you should ask. Always you should ask whether it is in or in relation to your business. Only when it is in relation to my business that I am doing it, sir. Why at all? Otherwise, that I will do this charity. That cannot be the kind of an answer that you should have. That it should have some kind of an impact. If somebody is celebrating their anniversary, anniversary is not something that unless you celebrate it, their business cannot run. Morally, this boosting to the employees, that kind of things are not going to justify. But certainly, if it has got a business nexus, I'll tell you where exactly the business nexus kind of a thing that you can debate. See, when a business is there, wherein that all prospective customers are invited, and you have conducted a session, a new car demonstration has happened. Later, that you have thrown a party for all those audience because you have selected the guests and then you have extended the invitation because they are going to be your prospective customers. And for them, that you have thrown up a banquet. Yes, then you can justify this marketing expenses, and on such a thing that you can take it. But the problem, the minute you say food and beverages, the question comes that without serving alcohol, why the bank function cannot happen. All these kind of questions. And another thing, the pre-set mind of the department revenue officers is also that always consumption of food and beverages is in a personal capacity of a person. It has got no nexus with the business. So unless you are able to establish a strong nexus that it is in relation to your business, this kind of an expenditure should be avoided. The ITC, taking of ITC should be avoided. I cannot say that you should avoid the expenditure itself because it is a business call. Practically, we have time till 20th of November, not 30th of November, October 3B, last date is 20th November. In order to get the time till 30th November, we have to delay October return. Hope my understanding is correct. But do we need to really do all this kind of an exercise for 10 days gain? Think twice, sir. Because that if you resort to do this kind of a jugglery in the end, and if for some reason your justification is not going to be acceptable, or that you have delayed the return, then there will be interest liabilities also. So keep all those things in mind. And if you are doing a significant amount of adjustments in the last minute, then taking this additional time and seeking the view whether it is correct under law or not is going to be a debatable issue. So my request is, please don't venture into such last minute adjustments. Supplier is giving a GST bill and we have made the payment, but the supplier had not uploaded and discharged the liability. What are the consequences? Simple, sir. If the supplier has not uploaded and discharged his liability, on the other end, ITC will not be eligible. So this is a very daily ritual that we are doing, no? So wherever that we find this kind of unscrupulous elements who do not comply with their requirement, then we have to chase those people and we have to ask them to come on board, file the return and pay the taxes, so that at the other end, if the ITC is eligible, that he will be able to avail it. Any other questions? I think significantly we are losing audience.
Yeah, but I mean, we are still getting a few questions, sir.
No,
I'd
no, no,
also-
I am open. I am not closing down at all. It's
Yeah,
all that how much that you have a doubt.
right.
Saurav is coming back again. I think that the earlier answer is okay to him. So as GSTR 2A getting populated basis e-invoice, can government not look into a single return every month, doing away R1 filing, provided e-invoice get mandatory for a SEZ unit? Just an idea to ease out compliances. Please correct my understanding if required. No, 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 sir. There is no correction that is required. See, these are all wishful thinkings, and yes, the government is actively working on. You might have seen in the latest newspapers also that a document similar to what we have in the income tax annual information statement, something that they are providing now for filing your income tax returns, wherein all your forgotten bank accounts wherever that you have opened, but you are not transacting, hence it is not there in your radar. All such details are being made available to you because you have connected them with your PAN and Aadhaar, hence they are able to pull out all the data. So such a system is there, and they are contemplating to make you available pre-filled returns. So I don't think that we will be having so many returns in the future. Certainly, the government is working behind the scenes. They are going to come out with an option wherein that the return data is going to be pre-filled for you. All you have to do is just cross-verify whether the pre-filled numbers are okay, because that they are going to initially make it editable fields only. So if you are not in liking the numbers given generated in the pre-filled thing, then certainly you can go and change them. But ultimately, that it should be what in the real time the transactions have happened. If such is the case, then return will fly through. So such an option is being explored, and maybe your wish may get materialized soon.
Okay. So audience, let me repeat this again. If there's anyone who'd like to directly ask any GST related queries on chat, sorry, on by unmuting, I will be able to do that. So you just have to let me know if you'd like to do that on the chat saying yes or no, and I will give permissions to talk.
Lot of enthusiasm has been shown initially by more than 60 participants were there. Now slowly the number is coming down to 40 and still going more or less. But what I could see is that yes, many people have got issues around the reconciliation, but there is no solution as such, because that you have to struggle a lot where exactly the mismatch has happened and how to go behind it, what needs to be done. This is what that we can teach you in a number of sessions, but there is no solution for you that which can fit into all kinds of scenarios. So that is the reason why I'm saying that you should go for a digitization, is because that so many factors cannot be verified by one human being when a large amount of data is there for you, and strict timelines are also there for you to act on. So you should go digital, and certain things are to be automated. So that is the whole purpose of today's webinar, to drive a point that reconciliation is a very important thing, and how exactly, where exactly the important points that you need to, and how that you should think of automation, and who can automate for you, that what should be his attributes, is what that I have covered in this session. So there are no further queries. I think that it's the end of session, I feel, and I thank you all the participants once again for devoting your time and then listening to the whole exercise and making it interactive. Thank you.
Thank you, audience. Thank you all. And thank you, Mr. Akela, for your time and efforts. So on that note, we will end the session for today. And those of you who have requested for the presentation, we'll share that. And people have shown interest for the demo. Our team will reach out to you by Monday. So until then, I will keep you all posted. Thank you all for your time and have a wonderful weekend. Thank you.
Yeah. Thank you.